Okay, now I'll be very quick because the information is quite concentrated. So we had a lower low for the DXY yesterday, which led to a mini lift at the start of New York, and then everything came crashing down. The the There was news of the DOJ enforcing crypto investigation international team or something like that. But I don't believe this is what brought the market down. Technically, everything behaved as it should have been, and it was in line with the S&P. So what happened to crypto happened to the S&P. The S&P couldn't lift to a higher high and then broke back under the divergence line. So we have now the stochastic on the S&P turned down. It doesn't look like we're going to get to do a double top. Maybe this is the 1-2 for the way down to start the impulse wave down. So the point I'm trying to make was that what happened yesterday was a rejection in line with the technical analysis of the charts. So it wasn't the news that brought the market down. The market had come to a peak and it retraced, which is what it's supposed to do, especially after a lift like that. So now we have on the S&P the stochastic on the daily turn down. On Ethereum we have the stochastic on the daily turn down, and we have yesterday we tested the 1514, which is a level on the daily to hold. We are holding that level yet. However, we are not holding the 1540. So that's why my presentation will be quite short today, because what we did yesterday was we got a rejection from a higher high. So there was no higher high on Ethereum. There was a slightly higher high for Bitcoin, just a smidge, very, very little. And that caused a drop down to the previous level of support and resistance, and at the moment for both of them we are below the support and resistance level. Being below the support and resistance level on the 1 hour, that opens the next space, which is 1340 as a possible target for Ethereum. It won't go there straight away. It won't go there today. It still has to break through support of the MAs. That's why I'm looking at this structure, and I'm looking at the 4095, 4097, this place here, which is the 50 on the 4 hour. Once the 50 on the 4 hour breaks, the next level would be 1340, which is here, because this would be the level that it broke out of and did a lift from. And for Bitcoin, same thing. We are below level 2 support, and we now need to reach level 2 resistance. So 18.3 is my limit here. And again, Bitcoin similarly to Ethereum needs to reach the 50 on the 4 hour. This is the 200 because I have it on the 1 hour at around 20k. So it needs to back test there. If it holds, happy days. If it doesn't, the 200 is right about here. It's a little bit lower than the 18.3 here, and it could absolutely wick down there and then consolidate around the 18.3. So it is very spiky, very volatile, a lot of big wicks to both sides of price action, to the upside and to the downside. And at the moment, we have, again, between the S&P on the daily, Bitcoin on the daily, and Ethereum on the daily, we have a downturn, and they are all in confluence. It was looking great yesterday for a lift. Everything was in line for a lift. However, it couldn't do it. It couldn't break the previous high with conviction. It couldn't reach the next level. Neither of them could Ethereum and Bitcoin, and neither could the S&P. So what happened was rejection. It's It's as simple as that. Now, until we turn the previous support back into support, so until 1540 becomes support, until 20.8 becomes support for Bitcoin, we are gonna keep coming down. So we haven't retraced this beautiful swing down to an acceptable fib level for continuation, and I believe the downturn will do that. If we're looking at Bitcoin, and I'm putting the fib from, there we go, right over there. The 0.5 would be the 18.3 right on the line. And if I'm putting the fib on Ethereum, there we go. Okay, super duper. 0.5 is 1358, a little bit above our 1340. Ah, wait, sorry, my bad. A little bit. Ah, no, that's it, because that's it. I think they're both the same level here. This one is a little bit higher, so that's where it started. So 0.5 would be an acceptable level for retracement for continuation to the upside, if we are to continue to the upside. Because again, what the 4-hour and the weekly are doing is the weekly is lifting and the 4-hour is floored, so they could have that lift, but not before the retracement. Again, I'm watching the daily levels. It's hard for me to read with the discrepancies between the 4-hour and the daily, how the 4 hours floored. We actually had a pivot on the 4-hour for the up yesterday as well. So I'm reading the daily levels. As long as we are above the pivot point, above the daily open, we're likely to continue to the upside, but we need to break through the M3. The M3 is the reversal level. It's where price action generally gets rejected to reverse. So if we manage to break through the M3, we're looking at M4, M5, which is what I was looking at yesterday. But then, because it couldn't break to a higher high above the M3, it just flash crashed down and broke the structure. So again, we have a downtrend at the moment on the daily. It's pushing down, it's broken through support. We have big signals now, significant signals for continuation to the downside. And I believe that this is the more likely scenario. In terms of probabilities, this is the more likely scenario. That's it for me. Have a good day trading. I'll be posting the fib retracements and the levels so that we can follow them step by step as we go through them. And I'll see you guys tonight to do a post-trade analysis, and I will be doing a 4-hour swing training session, a refresher, just to include the 702 or golden pocket entries, and to see the signals on the 1 hour and how they signal the pivoting of the 4-hour swings, because I believe it's really good to see and to do to train our eyes on previous swings. I'll see you guys tonight, and good luck.